Hello and welcome to REA's March quarter property market update for the new home sector. My name's Anne Flaherty, and in this update, I'm going to cover off the economic drivers impacting Australia's property market in 2026, with a specific focus around the development sector and how supply and demand for new homes are tracking. Diving into the economics, overall economic growth has picked up over the past 12 months, but does remain subdued relative to historical average levels. Weighing on growth this year is the fact that we have already seen two interest rate rises in response to higher inflation, as well as increased economic uncertainty and substantially higher fuel costs as a result of conflicts in the Middle East. In recent years, a key driver of our economic growth has been population growth. This was particularly the case over 2023 and 2024 when we saw exceptional growth and Australia's population expanded by a record number of people. While population growth has slowed substantially from those peak levels, it's still strong and it's sitting in line with that 10-year pre-COVID average level. Overseas migration is the primary driver of growth in every state. From a real estate perspective, we know that when people first come to Australia, they're far more likely to be renters than owner-occupiers over those first 5 to 10 years. In other words, rental demand has increased significantly off the back of this strong overseas migration. When we look at interstate migration, there are some mixed trends. Queensland has seen more people moving into the state than out of it, but New South Wales, on the other hand, has continued its multi-decade-long trend of more people leaving the state than moving to the state. In this case, high property prices are a key component of this trend, with a lot of younger people moving to other states where the cost of housing is significantly more affordable than it is in Greater Sydney. WA has been the state that's seen the strongest percentage growth over the past 3 years, while Victoria and Queensland are the next strongest growers. Victoria has seen the biggest shifts. If we look at pre-COVID, it was the fastest growing state. Then, of course, during the pandemic, it was the fastest shrinking state. It's now really recovered those growth figures and actually over the next decade is predicted to be the strongest grower. A key challenge that households are dealing with this year is the return of high inflation. Inflation had peaked at about 8% back at the end of 2022, but since this time had steadily recovered, and by the first half of last year, we're sitting within the Reserve Bank's target range. This was why last year the Reserve Bank was in a position to lower interest rates, and in 2025 we saw 3 interest rate cuts, which supported a recovery in consumer sentiment and contributed to stronger home price growth. Now, as of March 2026, 2 of those rate cuts have already been reversed, and there's the potential for more hikes later this year if inflation does persist. Moving to the property market now, and property prices are up in every capital city and rest of state area compared to 12 months ago. Perth has been the strongest grower year on year with almost 20% growth in its median home price. Darwin, Brisbane and Adelaide were the next strongest growers, all with prices up in the double digits annually. Driving the outperformance of these markets, they've all seen higher levels of buyer demand and relatively limited stock for sale. So conditions have been very competitive in these markets. On the other end of the spectrum are Melbourne and Canberra, which saw growth of only 3 and 4% year on year. Buyers have been relatively well positioned in these markets. The reason being there's been higher stock levels for sale, which has contributed to that slower rate of growth that we've seen. In Sydney, things have been more moderate with 6% growth, but due to the high median price of homes in Greater Sydney, that lower rate of growth actually corresponds to the third strongest dollar figure of growth over the year. The difference in performance that we're seeing across the capitals is particularly evident if we look at growth over the past 5 years. So Brisbane, Adelaide and Perth have all seen home prices almost double compared to 5 years ago, whereas in Melbourne, they're up just 13%. Over the past 5 years, Melbourne has gone from being the second most expensive capital city behind Sydney to the third cheapest city in the country behind only Hobart and Darwin. Houses typically outperform units for price growth over the long run, and while this is still the case, we have seen that gap narrow over the past year, in part due to the high cost of developing new apartments in the current market. Regional areas, which saw a strong outperformance during the pandemic, are still performing strongly and have outpaced the capitals over the past year. In part, this is due to better affordability in the regions, but it's also due to ongoing work flexibility as well as retirement trends. If we compare 2025 with 2024, there have been some really interesting shifts in which types of buyers are more and less active. In particular, we saw a big jump in investor activity in most states, especially across Darwin, which is behind that large NT figure, and also in Tasmania and Victoria. On the flip side, first home buyers were less active across the board. First home buyers and investors often compete for similar kinds of homes, which is why when we see more activity from one group, we often see less activity from the other. Shifts in lending to other owner-occupiers were up slightly, but largely unchanged. It's going to be very interesting to see what happens with first home buyer demand this year. In October of last year, the 5% home deposit scheme was brought in, and it's already showing signs of driving up prices for properties that fall within those price caps. One of the key differences between this scheme and previous first home buyer schemes is that it is open to all first home buyers, regardless of their income level, and it has also got an unlimited number of places. So there's a good likelihood that the take-up of this scheme is going to be very strong. And as I mentioned, this is likely to drive stronger price growth within those price caps that are available in each capital state and capital city and rest of state area. Shifting to the rental market, and once again, we have seen extremely strong growth in recent years, with every capital city seeing exceptional growth, especially between 2021 and 2024. Rent growth has now moderated, but rents are still rising, and we've seen a substantial decline in rental affordability compared to pre-COVID. To put some dollar figures on how much rents have moved, compared to 5 years ago, the average Aussie renter is paying around $12,000 more per year in rents. Perth has seen the biggest jump over this time, with rents up about $15,500. Perth has a significant housing shortage and is also the state that's seen the strongest population growth in recent years, which is why in WA we've seen such a large jump in rents. Now moving to the new homes sector. Construction costs have been one of the biggest stories and biggest barriers to the creation of new homes in recent years. This chart goes right back to the 1960s, and you can see that building costs have increased at a pretty much steady rate for decades. Cut to post-COVID, and we saw a massive escalation in costs, which rose at a historically unprecedented rate. Even though building costs have since returned to long-term growth rates, they never decreased, and they have really reset how much it costs to build a home. And it isn't just the cost of building that has increased, it's also taking longer. When it comes to houses and townhouses, we have seen some improvement in building times, but when it comes to apartments, the average build time has continued to rise and is currently sitting at about a year and a half. One of the key reasons Australia is in the midst of a housing shortage is due to population growth exceeding the rate at which new homes are being delivered. Fortunately, we have seen dwelling approvals pick up, but they are not yet at the level we need to correct that housing undersupply. Houses have seen a stronger recovery than units, which is due to the lower cost per square metre of building houses, making them more feasible than apartments in many cases. While approvals and construction starts for units have increased, this hasn't yet translated to an increase in unit completions. Houses are doing much better, with completions almost in line with pre-COVID levels. Normally, we think of the median price of a house as being higher than the median price of a unit, and in the established market, this is very much the case. But we are in an interesting situation now, where the median price of a newly developed apartment is significantly higher than for a newly developed house. In part, this is due to where new apartments are typically being built, which is your more expensive inner and middle ring suburbs, whereas new houses are often in outer areas. But it also has to do with building costs. Because it's so expensive to build apartments, developers have shifted towards premium developments targeting that cashed up downsizer market. If we look at listings of new homes by price category on realestate.com.au, half of all new apartment listings were priced at 1.5 million or above over the past 12 months. Conversely, only 6% of new house listings were priced above that $1.5 million level over the past year. When it comes to how many bedrooms home buyers are looking for, there are some differences between the new homes market and the established market. Among those looking to buy an established house, 3 bedrooms are the most in demand, but among those looking to buy a newly developed house, the overwhelming majority are looking for 4 bedrooms. When it comes to apartments, for both established and new, 2 bedrooms are the most popular. However, when it comes to what is being supplied, 3 bedrooms have become the most common apartment type. Just as there have been significant differences in home price growth across the states, we're also seeing some differences in development activity. Developers prefer to build in markets where prices are rising. And if we look at the states that have seen the strongest price growth, WA, Queensland, South Australia, these have also seen the strongest rises in dwelling approvals and new construction starts. Victoria is the only state which didn't see dwelling approvals increase over the past 12 months. And in strong part, this is due to the weaker price growth seen in the state, as well as challenging tax and legislative settings, which create difficulties for developers. For Victoria, the fact that construction activity hasn't bounced back could have implications for affordability over the coming years. Even though Victoria is currently one of the most affordable states to live in, it is also the state that is predicted to see the strongest population growth over the coming decade. While the current undersupply in Victoria isn't as bad as the other states, unless development activity picks up, affordability is likely to deteriorate. Australia is one of the fastest growing developed countries in the world, and this is predicted to continue over the next decade. Ensuring enough new homes are built is going to be key to ensuring affordability doesn't deteriorate further. Fortunately, we are seeing more buyers looking specifically to purchase new builds. Searches to buy new and off-the-plan homes really declined in the aftermath of the pandemic when a lot of builders were going bust and buying new carried greater risk. But gradually we've seen confidence come back. In each of the past 12 months, we saw annual growth in the number of consumers looking specifically to build new. This increased demand should hopefully flow through to an increase in the number of new homes that get underway. That brings us to the end of the presentation. Thank you so much for joining today.